That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Tematica Research Chief Investment Officer Chris Versace, as well as Yahoo Finance's Josh Schafer, joining us here to break down the moves today. Josh, let's start with you on that close.
Hey Josh, yeah, so stocks again moved a little bit lower today, not major moves depending on exactly where we're looking. So you can see here the Dow Jones Industrial Average falling about 60 points today. The NASDAQ Composite fell about 0.7%. That was your laggard out of the major three indexes. And the S&P 500 was off 0.5%. Some of your key market drivers today, of course, President Trump out this morning discussing potentially more tariffs. We're waiting on that upcoming tariff deadline. And Josh, you and Chris were talking earlier about that weaker than expected services PMI that came out, PMI services from the ISM. So that was sort of your key market headlines, but there isn't a ton from a macro perspective expected this week after that Fed meeting and that data dump we had last week. What the key moves have really been is post the July jobs report, we've been watching again, interest rates fall, and then we've seen interest rate sensitive sectors start to outperform. So that's your 10-year closing today at 4.2%. Then you take a look at the Russell 2000 and the two-day move we've seen to start the week. That index is up 2.7% to start the week. I'm going to look and see if I can find Bitcoin here, and we'll get a check on that before we take a look at stocks. So Bitcoin right now trading around $113,000 per coin. I do want to look at some individual movers here, Josh, as we close out the day. Palantir was one that we had our eyes on all day. Palantir rose about 8% during the day. That now closing at a market cap above $400 billion. So that company continuing to increase its weighting in the S&P 500. Another name that I believe I have up here on my screen, there it is, AMD. We're waiting for AMD earnings. AMD, of course, a chip maker in that AI space. AMD has also been a top performer among the chips this year. That stock is up 44% year to date coming into the results. And then let's take a look at what we had from a sector action perspective. We were talking earlier in the 3 p.m. hour. Really, a lot of the action today was yesterday's winners were today's losers. That continued in the final hour of trading. You see utilities, your laggard on the day, also tech and communication services. And then we look inside the NASDAQ 100. This is where I can find Palantir for us. The square is getting bigger as its market cap goes up. That stock up almost 8% today. Also had a rally yesterday, starting the week up over 12%. You look broadly at the NASDAQ 100, it was not a great day for large cap tech. You can see the bigger the boxes here, the larger the market cap. Most of the mega caps not performing too well today. Your lone standout was Amazon, up 0.9% after falling yesterday. But it'll be interesting to see, of course, as we get AMD earnings after the bell and we're waiting on some other results, what that does for the tech trade headed into tomorrow.
All right, thank you, Josh. Chris, your thoughts on the moves we saw today in the markets?
Not unsurprising. You know, I mean, I think when we step back and we say, wow, the market over the last few months, tremendous run. I think that we got some really good news last week with Microsoft Meta, but you look at how the post-trade reaction was on that. You know, they popped up, kind of gave their gains back a little bit. I think the market is kind of ready for this, you know, August, September period of digestion. Time to be a little, you know, thoughtful. Maybe let stocks come to us, like I said before.
What do you make? I mean, we're waiting here for more earnings on deck. Got AMD, got Rivian. How would you generally characterize the earnings season so far, and what do you see ahead?
So I think if we were to look at it, you know, there's a statistic out there that 83% of companies reported have beaten their earnings. But remember that coming out of the March quarter earnings season, there was a lot of unknown about tariffs. And we saw companies, you know, either pull guidance, reduce guidance, that sort of thing. And as we talked about earlier, we've gotten a little more clarity, and I think companies are a little more comfortable with that. So perhaps with the benefit of hindsight, they might have reduced expectations to walk over them a little bit. But now we're starting to see that for the back half of the year as well. And, you know, the last time I was here, we talked about comparing second half of the year EPS growth compared to the first half. Back then, at the end of March, up about 14%. We've seen it tick steadily lower, such that 2 weeks ago, 8.5% was the new number, then 7.8%. Lo and behold, after big tech last week, it's a whopping 6.8%. So the expectations for the back half of the year have come down, again, potentially giving them some room to beat them. But the concern I have is we have this, you know, 2-month period that's less than market friendly, let's call it. Folks might say, earnings expectations are coming down. I got more uncertainty in the market.
Seasonals.
Seasonals, and then maybe it's time to just sit back, let the market digest all of this, and come back for the real push.
Well, let me ask you, if you saw that pullback then, that would be a buying opportunity in your opinion?
I think it would be. It would depend on what's the catalyst for the pullback, right? And after that pullback, do we see any greater clarity? And so if you think about some of the big pullbacks we've seen last year, late July, early August, September, and then obviously April of this year, when we saw those, when the S&P 500 was bumping up against oversold territory, the risk to reward, that's the way we have to think about it. The risk from there going demonstrably lower was extremely low. The opportunity or the reward to be had was disproportionate at that time. So you could go into the market a little more comfortably. If we see something like that, believe me, it'll scare some folks, but that would be the opportunity.
What about another theme, the great AI trade and trend, which as you've made your way through these earnings reports, Chris, I think you'd have to say it looks intact.
Yeah, 100%, right? So if you look at what ServiceNow said, Palantir, for example, or even the comment that I shared regarding Lemonade, AI adoption in the enterprise continues, arguably accelerating. We know it so much that when you listen to Google, Meta, or Microsoft, they don't have enough capacity. Even after increasing their capital spending, they have to do it again. So very much intact, but again, while we enjoy that, the question we have to be mindful of is there anything out there on the horizon that could kind of disrupt that? And the only thing I could think of right now could potentially be the pending chips tariff that Trump is going to announce. And I say that because this morning, Foxconn reported, partner for Apple, partner for NVIDIA. Guess what? Their numbers were really strong sequentially on a year-over-year basis as well. Why? Cloud and networking. The next catalyst we could get is when TSM gives their monthly revenue report for July. Could be late this week, early next week. But after that, until we get earnings from NVIDIA, we're going to have to digest this potential tariff on chips.
On the great subject of the AI trade and trend, I want your take on Palantir, which is a name I know. Listen,
we own it.
You've owned it. You've owned it, and you're believers for a while. It surged another 8% today. I've had any number of very smart financial analysts, Chris, come on this show, and guys that I've known for a long time who told me, listen, like the company, I like the tech, nosebleed valuation, it's a sell. And I'm just wondering, is Palantir purely idiosyncratic, or is there some type of broader lesson learned in this story for investors?
So, I mean, it's kind of tough, right? There's what you can call these cult stocks, right? Stocks that people love, right? Or in some cases, some people love to hate. Palantir, I think, is one that people love. And when we look at its moving beyond, the public sector, growing in the private sector, that's what you want to see. You start seeing
that commercial division.
Correct. You continue to see these large wins that they put up, including, as we talked about off camera, a $10 billion contract with the U.S. Army that takes them out to 2035. You think about my comment about Axon and visibility. That's a lot of visibility. I would also argue, too, that if you were thinking about Palantir on a simple PE basis, that's not the best metric to use. You've got to look at on a PEG ratio, PE to growth, because of this multi-year runway that we have.
It's interesting. I talked to CEO Alex Karp on that print. I asked him how much he thinks about his stock price. He says, I don't think the stock price, I think how am I going to 10x this top line over the next 5 years.
That's the way to do it.
There it is. All right, thank you, Chris. Rivian, second quarter earnings just crossed the wire moments ago. And here to help us break it all down, we got Yahoo Finance senior autos reporter, Pras Subramanian. Pras.
Yeah, Josh, mixed results here, but we're seeing the stock kind of fall here in after-hours trading. So basically, they reported a revenue beat of $1.303 billion versus the $1.28 billion per Bloomberg consensus estimates. Adjusted EPS loss, though, 80 cents versus 64 cents as what was expected. And from a regular EPS loss, 97 cents versus 77 cents, so wider there as well. The forecast is really sort of the interesting issue here, because they said that because of continued impact on its results and cash flows of its business, and because of some of the recent changes associated with the regulatory credits and its second quarter performance, the company is increasing its adjusted 2025 full-year EBITDA loss range to $2 billion to $2.25 billion, from 1.7 to 1.9 billion previously. So there's that kind of that wider loss there on adjusted EBITDA basis. On the positive front, the R2, their new smaller SUV development is progressing there at their factory, and they still anticipate a 2026 release of that vehicle. But you see the stock here falling here because of that adjusted loss projection because of Trump tariffs, right? The tariffs, but also the loss of the EV tax credit is going to hurt them in the second half of the year.
Pras, I'm also just curious to hear more about the R2 mid-size crossover, Pras. What do we know about that in terms of production, when it hits, and who are they taking on with that product?
I mean, they're basically taking on anyone like the Tesla Model Y, Volkswagen ID2, which Volkswagen is a partner of Rivian now these days. Just those mid-size SUVs, EV SUVs, maybe in Cadillac Lyriq. But yes, they said the R2 was progressing development-wise. They call them the test mules are out. They're driven around town, driven around different parts of the country. They anticipate that the factory will be shut down for about 3 weeks in September because of the fact that they're going to have to sort of build out that production line and also increase total production of the plant. But they still anticipate first half 2026 production of the vehicle. And because of the fact the vehicle should be more efficient to make, easier to make, lower cost of goods, it'll hit profitability sooner than the current R1 vehicles.
All right, thank you, Pras. Appreciate it.
Thank you.
Second quarter results for AMD, they are just hitting the wire right now, so let's get you those numbers. AMD, Q2, adjusted EPS, 48 cents. Street was at 49 cents. Top line, though, Q2 revenue comes in at $7.69 billion. The Street is at $7.43 billion. Let's turn ahead. Let's look for what they're calling for Q3. AMD sees Q3 revenue between 8.4 to $9 billion. The Street was at $8.37 billion. And I'm just looking at shares right now to see the immediate reaction. Up a bit in the after hours here. No, now we're actually popping more than 2%. And keep in mind, this stock had a nice run into this print. It was up about 45% year to date. Analysts would chalk that up to different reasons. They'll talk about China AI returning. They were talking about how the core business did seem to be doing just fine, they said. And at least initially here, we see a positive reaction up about 1.2% in the after hours. For more on AMD's second quarter results, let's get to Benchmark Company Managing Director and Senior Semiconductor Research Analyst. That'd be Cody Akery. Cody, it is good to see you. So AMD reports. What do you make of the results, Cody?
Yeah, they look like strong numbers to me, up about 300 million this quarter and about a similar amount for September. The bottom line is a little iffy, given that they're just in line with the consensus, 48 cents for June. And then the bottom line for next quarter, they don't give an EPS guidance, but they are saying that it excludes any China shipments, which we expect them to get back into China quickly as the Trump administration has relaxed those guidelines. And so that number, 800 million, came out of the June number. And so if you add that back in, then you've got a really nice upside this quarter. And if you add anything back into September, then that 400 million turns into probably something closer to $1 billion of upside. And so I think overall it's a very strong number, and hence the stock reaction after hours.
Cody, let me ask you a key issue that obviously, you know, your colleagues on the street are asking. Broadly, Cody, how big is the AI opportunity for AMD, for Lisa Su's company, with China sanctions reversed?
Well, with China sanctions, it's about $1.5 billion that they expect that they lost this last 2 quarters. And so I think that reverses pretty quickly. Overall, for AI, it's a huge opportunity because you see what NVIDIA is doing. And really, AMD is the only viable alternative outside of the custom ASICs that the hyperscalers are doing. So if you want general purpose CPUs, and every server has to run on a general purpose CPU, to handle all the back office and all the coordination of these hyperscaler data centers, then if you're looking for an alternative to Intel or NVIDIA, AMD is really the only game in town. And they've been really eating Intel's lunch from a performance standpoint, and from a price and performance standpoint versus NVIDIA, they're also a very, very good alternative. So I think the upside is really unlimited for AMD. It's just a matter of can they capture it? And I think so far they are starting to.
Cody, you know, you mentioned NVIDIA. When you think about AMD's latest and greatest AI chips, How would you stack them up versus NVIDIA? Is there a performance gap there?
Well, with their MI350, they've really closed the gap. With their 400, they're getting some performance advantage. Really, where AMD gets the biggest advantages in their memory bandwidth, their ability to throughput faster data. And so, on a processing-to-processing basis, AMD likely still trails NVIDIA somewhat. But what they make up for or lack in processing, they make up for in memory bandwidth, and that's really been their strength, and that's really the gating factor for these hyperscale data centers is how fast can they push product through these processors. It's not necessarily absolute processing speed, but it's the bandwidth of memory that is the limiting factor.
Chris, I want to get you in here because Cody likes this name. I know he tells his clients this one's a buy. You're not such a fan, Chris, of this one. Explain why.
Well, it isn't that we're not a fan, right? You know, when you look at the Pro portfolio, we have shares in NVIDIA and we have shares of Marvell. And, you know, I think Cody said, if I remember correctly, that AMD is a viable alternative after some of the custom ASIC chips that the hyperscalers are doing. You're talking about, you know, Amazon, Meta, Microsoft, Alphabet. That is one of the angles that Marvell offers us opportunity into those custom ASICs, as well as riding the overall wave of AI and data center demand. Marvell also has the enterprise networking and the carrier infrastructure, which I see really benefiting from incremental capital spending as AI adoption continues to rise.
Cody, your response to Chris's comments there.
Oh, I completely agree with Chris on that. The ASIC vendors, the Marvells and Broadcoms of the world, are really coming on into their own as the hyperscalers are continuing to lean into custom solutions. They're wanting tailored specific solutions for their very tailored specific workloads. And so they don't need to pay for all the overhead of a general GPU that is NVIDIA if they've got a very specific workload that they need to customize for. And with these ASIC vendors, they're able to do exactly that and provide a much cheaper internal solution that meets only the needs of the hyperscalers individually, and I think that that's a big market going forward. But there's also the need for general purpose GPUs, CPUs, and so I think that AMD can bridge in between because you do need CPUs to run even those hyperscale servers that are running Marvell and Broadcom chips. They have to have CPUs to manage all that backlog or that back office workload. And so I think that AMD is a very, very nice alternative to Intel today, is what we've seen, and to NVIDIA's Grace Hopper or Grace CPU that is entrenched in their Blackwell processor.
Cody, how should investors think about the 232 tariffs and what that could mean for AMD's financials?
Well, the tariffs are less of an issue, I think, only because these processors are being built largely in Arizona, and so these are domestic production into domestic data centers, and so I don't think tariffs are going to be a major issue. There are issues as AMD starts to ship into China and any restrictions into China, but I don't think that tariffs are going to be a major concern.
You know, Cody, AMD offered what looked like a solid forecast here. You see the shares are slipping here, at least, you know, in the after hours. What do you chalk that up to, Cody, potentially? Was this just a very high bar heading into this print?
Yeah, I think so. I think that AMD has had such a run that almost anything was going to cause some profit taking. Only an absolute blowout number was going to probably keep investors happy. And so I think that anything close to the bottom line, inline June number, and what probably will shake out to be close to the bottom line September number is going to be an excuse for traders to take profits. And I don't blame them for that. But I do think in the long run, AMD is a great investment, and it will grind higher following any quick trading volatility.
Cody, always great to see you and to have you on the show. Thank you, sir.
As well. Thanks for having me back.
Time now for what to watch Wednesday, August 6th. We're going to start off on the earnings front. The earnings season, it rages on here with more big names reporting Wednesday, including Disney, McDonald's, Uber, and Lyft. Disney announced the results for the third quarter before the markets open on Wednesday. Analysts expecting Disney's theme parks to post strong results in Q3, despite concerns about new competition like Comcast's Epic Universe in Florida and fewer park visitors more broadly. Shifting gears to ride shares, both Uber and Lyft reporting second quarter earnings on Wednesday. Uber reporting before the markets open. Company is growing its trip volume by expanding into grocery delivery and partnering with Instacart and Waymo in 2 cities. The investors will also be listening for any commentary around Uber's new partnership with Lucid and Nuro for a new autonomous robo-taxi program. Also taking a look at Lyft, analysts still anticipating Lyft to lag behind Uber when it comes to bookings and growth. Lyft's ride growth in Q2 will depend on how well it scales geographically. And finally, we're going to be getting some more remarks from a couple Fed officials on Wednesday as well. This is coming after continuing commentary from President Trump around a potential successor for Fed Chair Jerome Powell. Trump saying on Tuesday that the list is down to 4 people, but that Treasury Secretary Scott Bessent will not be nominated for that role. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.